My name is Neil Atkinson and I'm head of the Oil Industry and Markets Division at the International Energy Agency based in Paris. And I've come to Madrid today because I've come to launch the 2018 version of the IEA's annual 5-year oil market outlook, where we take a look at the key trends in oil demand and supply and refining and trade. And we try to paint a picture of what we think the oil market will look like 5 years from now in 2023. And the key points are very interesting this year. As far as oil demand is concerned, we think that oil demand will continue to grow strongly over the next 5 years. Today, at the beginning of our forecast period, the oil demand growth is quite strong at 1.5 million barrels a day or so. We think that the rate of growth of demand will begin to slow over the next few years to just over 1 million barrels a day by 2023. But on average, oil demand will grow by about 1.2 million barrels a day, so that by 2023, the oil market will be about 7 million barrels a day bigger than it is today. Now, within the big picture, as far as oil demand growth is concerned, we see some quite interesting trends. And the first thing we'd like to point out is that the penetration of alternative fueled vehicles in China and some other developing countries is beginning to have a very marked impact on the level of oil demand in those countries. It's starting from a small base, but we're beginning to see a big penetration of electric vehicles, compressed natural gas vehicles and other alternative fueled vehicles into growing transport markets. So that's something to watch out for, and it's one of the factors which lies behind the rate of oil demand growth beginning to slow. Within the overall oil demand picture, we're seeing petrochemicals demand grow very strongly. We think that it will represent about 25% of global oil demand growth over the next 5 years. Now, moving over onto the supply side of the balance, we now have challenges in finding where the oil is going to come from to meet the 7 million barrels a day or so of demand growth that we expect. And at the beginning of our forecast period, we see a major challenge. And that major challenge is related to underinvestment. In the last few years, investment in the upstream oil and gas sector has been relatively low, and it shows little sign of growing. If it doesn't grow soon, we think there is a danger that supply will not grow fast enough to meet demand. And of course, it's not just a question of investing for growth. You also have to invest significant amounts in the oil industry just to maintain production at existing levels because of decline rates in mature fields. Having said that, there will be plenty of supply growth in the early part of our forecast, particularly from the United States, but also from Brazil and Canada and Norway and 1 or 2 other countries. So for the next 3 years or so, we think that the increase in global oil demand will be met by increases in oil supply from leading non-OPEC countries. But the increase in oil supply is very heavily front-loaded. And after 2020, we see relatively low growth in global oil supply. And that is a challenge for the world as we attempt to adjust to the rising demand, which we expect to see by 2023. Having said that, there are also some very interesting challenges and some interesting conclusions with respect to global oil trade. We're seeing that China is increasing its net imports of crude oil very dramatically over the next few years, while at the same time the exports from the United States are going to be increasing. So we should see that the United States becomes a lower importer, a bigger exporter, and as the market increases in countries like China, the United States will find a market in this growing sector of the global economy. So as far as the next few years are concerned, we see global oil demand going up 6.9 million barrels a day. We see global supply growing by about 6.4 million barrels a day, which implies that the spare production capacity available in the world by 2023 will have shrunk to levels that we haven't seen since 2007. And this shrinking of the spare production capacity cushion raises issues over security of supply. It raises the possibility of price spikes, which we think are a bad thing for the global economy. So there are a lot of challenges. Our report is 136 pages long. It covers the whole of the global oil and gas industry, and we hope that you'll get the opportunity to read it and look at our slide pack, and we hope that you find it interesting and useful, and you're very welcome to get in touch with us at any time if you wish to raise any questions. Thank you very much.